Welcome to Understanding the Compliance Framework for Operating in New Zealand. I'm Rebecca Gans, and I have with me today Murray Sorelius, a partner who specialises in overseas tax matters.
Hello Rebecca, and thank you for inviting me here today.
Pleasure, Murray. And also I have Anne Todd, a partner who focuses on audit and financial reporting matters.
Hi Rebecca, really pleased to be here.
So today we're going to be looking at compliance framework and also opportunities to navigate those compliance requirements. Anne, could you take us through the financial reporting compliance overview?
Yes, the framework is actually quite straightforward. The first thing you need to do is register with the Companies Office. 10 days to get registered though from when you start business in New Zealand, so don't delay with that one. The most significant requirement is filing annual financial statements which are IFRS compliant. This can be quite onerous for a small business. Thirdly, submitting annual returns. Again, very simple online form. Just don't forget to fill the form out. The registrar might strike you off. Finally, the accounting records just need to be good enough to comply with the tax obligations and, of course, the IFRS requirements, which can be quite onerous.
So IFRS is an international financial reporting standards, yes?
That's right. And New Zealand has its own framework underneath that. Fortunately, it's slightly reduced on what would be if you were fully compliant with the international standards.
So it's better, but it's still an awful lot of work.
That's right.
Excellent. So Murray, could you explain what happens in terms of the tax framework if someone comes and they're non-resident for less than 6 months?
That's right. So first of all, tax, it really does depend how long the business is here in New Zealand. If the business is here for less than 6 months, typically we'd expect the tax to be a fairly light touch. The business will still need to consider things like GST and customs duties if they're importing goods. They'll also need to consider the employee's position. Again, less than 6 months, there may be no tax obligations, but it does very much depend on the employee's circumstances. For example, if they're planning to stay in New Zealand on holiday afterwards, that may take them over the 6 months, even though they're only working for less than 6 months.
And the Inland Revenue considers that that will make them taxable.
That's correct. It's a days present in New Zealand that will matter, and that can open up personal tax liability. And if that happens, then the business could also have a withholding tax obligation on the employee's salaries.
And what happens with the tax framework when they stay beyond the 6 months, the business here is here longer?
Once we get over 6 months, we typically see businesses becoming much more taxable in New Zealand. We then need to consider what profits are subject to income tax here, whether the business has to register for goods and services tax, and if there is a liability to income tax, there's a whole lot of planning that's needed around the business structure, the funding of the business, and making sure that all of the New Zealand tax regimes are complied with.
Thank you for that. That's the overview of the compliance framework. But what about the compliance opportunities? Murray, could you take us through those from a tax perspective?
Certainly, thank you. Well, the first thing is around good housekeeping. If the business is going to be in New Zealand for less than 6 months, there are some shortcuts that can be taken. But if you take those shortcuts and then the contract or the project extends beyond 6 months, then they tend to come back to bite you. So the first is to plan ahead and protect yourself from changes in circumstances. The next thing is looking at how the business structure and the business operations help you comply. The idea is to be fully compliant, but to minimise the aggravation and the cost of actually being compliant. And so that's important to get that set up well from the start. And then finally, if you do have employees in New Zealand and you have an obligation to deduct PAYE from their salary, but you don't have much of a presence here, there is a mechanism that can be used to have the employees account for their own PAYE. And this just reduces the exposure that the business has to the inland revenue and the compliance obligations of the company.
Great. And Anne, what are the financial reporting opportunities, Anne?
Rebecca, those are closely aligned to the tax rules. Firstly, if you've got a permanent resident presence here from a tax perspective, then you're going to need to register with the Companies Office. Secondly, the structure from a commercial perspective that's often used is a branch structure. From a financial reporting perspective, this can have unintended consequences. If you get advice from us up front, we can simplify that for you.
Excellent. Well, that's it from us today. I really appreciate your time.
Thank you, Rebecca. It's been a pleasure.
And you too, Anne.
Great to have been here, Rebecca.